All right. Welcome, everyone, to the 22nd episode of the AdvisorTech Book Live podcast. Today, I have Alex Graf with me from Modelist. Welcome, Alex.
Thanks for having me.
So, the first couple questions I like to ask, well, first three questions, let's see. What is your area of expertise? If you could pick just one single thing in your work domain, what would you say you're an expert at?
I think what Modelist is an expert at is channeling an advisor brand into investment infrastructure that is custom to them.
Okay, cool. So, like customizing portfolios for the firm and then also for the clients?
Potentially the clients, generally the firms. A big part of who we are. My background, I've been at 4 different $1 trillion plus managers, and I'm more of like sales, operations, marketing. My business partner Joe, who's the CIO, or pardon me, CEO, he's more on building the tech instance that all of our everything we do is built into a internal tech system. He's in charge of that, and then we've got our CIO. His background was like Bridgewater, global macro hedge fund. He's the brain of like how everything moves based on all of his experience managing multitudes of billions of dollars for different institutions.
Yeah, cool. Awesome. All right. Second question. Are you reading any interesting books currently?
Well, I did just finish the Rick Rubin book, so thank you.
Oh, really? Awesome.
Yeah, I really liked it. It was a different book for me in terms of like what I'm used to reading because it's all these like sonnets or whatever you call these short stories. But I just thought it was a good read. It was easy. I think what I read most often is a book. An author that I love is Simon Sinek. So I actually just reread Infinite Game,
Okay.
which I'm a big fan of. And then a secondary book of that, which actually got me started on this game theory thing, is Robert Wright wrote a book called Non-Zero, basically about non-zero sum games and something that's really just impacted the way that I've operated in my career, and it's been helpful.
That's really cool. No, I love the Rick Rubin book. I read it daily. So I actually have a date stamper, and every single day I like stamp the chapter or the quote. There's quotes and chapters.
So that's
Um
why you sent me the date stamp chapter. I was wondering, my wife and I were looking at that, like, why did I get a date stamper? Now that makes a lot more sense.
yeah, so two reasons actually. So I send a book, I send the stamper, I send the little field notes and then pens. Hopefully did you get all of that or
Pens right
perfect?
here. Yes, I've got
Yeah.
it. Field note. Yes, so I do have all of it.
So yeah, it goes off the post I did about like the 3000 project, but it was basically like using the field notes as like your daily checklist, your daily to-do list, and then the date stamper. But I'll explain that better for everybody at some point. But then the book is just like I think getting inspired daily by good words is a good thing to do. So reading good books, and that's I think that's a great book to.
Yeah, and I think the other thing and I love that you recommended is just that, I'm a big music guy. And the more and more I learned about Rick Rubin years ago, just knowing that he was like with Jay-Z, the Beatles, he's done all these different like he's inspiring the creator. And I think that concept is just so interesting that someone can be that kind of person and influence in that way is just kind of
Yeah,
fascinating.
no, it's cool. Yeah, the first chapter I think is called "Everyone is a Creator." I love that.
Yeah, yeah.
Um, Last question for the intro. Is there any technology you're using currently that's new or cool or helpful or
We are built, so we've already built our own technology. Everything that we do, part of what got me to come here was this concept of building things custom, being more personalized, empowering brands to generate organic growth. And because I had been hunting different asset allocators for a long time, I kind of started seeing where the industry was going, but no one had really built a system to do this at scale and do it consistently. And I think what got me excited is I think in general, technology is deflationary. And I just saw something that one, the industry was starting to talk about just customization and personalization, but I hadn't seen someone that was smart enough to like put it all together. Luckily, my partner was a client, so I knew him a little bit. But then I kind of made sure that I put him through some paces of some people that I thought were rather intelligent in that space to make sure that, I'm pretty smart, but I don't manage money day in and day out. And they do. And so once I got about 6 of my smartest friends in the investment business saying, yeah, this structure all works, and knowing that we were building this into tech, I was like, this makes a lot of sense for I think where the industry's going.
sweet? No, that's good to hear. So how Maybe the next question is like, what's your background, and then what led you into this category specifically? You kind of just shared that, but
Yeah.
if you want to elaborate any more on your background and then why you picked this
Yeah, I'll give you a
category.
quick story. So I got smart enough to start in this business in the investment world, selling investments. I got licensed and on the phones in September of 2008. So I just very quickly learned that I did not know anything about how the world worked in the investment space, but I was very intrigued.
September
So
2008, that's not a great time, I don't think.
Right, but I guess what I realized when I worked at a company called Allianz, AIG had just effectively gone under, and I had financial advisors calling into me, very concerned, basically saying, "Well, AIG went under. How do I know you guys are solvent?" Right, and so
Right.
what I kind of set me on this mission of like finding all the smartest people in the company and trying to figure out how the game within the game works, and that was trying to sit with actuaries, people in the general account, and I just had this fascination with how things work and how it all fits in together, kind of connecting those dots. Left Allianz to Invesco after grad school down here in Chicago. Invesco is where I learned about ETFs, indexing, and I think more importantly, the RA movement had really started picking up steam. When I sold annuities, independent advisors were definitely known, but the RA side of that was a little funky. So I did that for about 4 years. Then I went to Columbia Threadneedle for a quick stop, selling ETFs. And then most recently, I was at Nuveen, helping their RIA aggregators, TAMPs, OCIOs, kind of covering exchange traded funds, direct indexing to a lesser extent, some of the SMAs and alternatives that they had. My job was really to go wrap myself around these investment teams and try to figure out what insights from a asset management standpoint I could help them with to help them do their job. That could be doing research on asset classes. It could be a specific fund that we think is great. Some of those things, and I think that's where I really learned. Nuveen was a phenomenal organization, and I think when I started getting more into calling on what I would call a TAMP, turnkey asset management platform, I just saw that as a linchpin from a operational excellence perspective that allows an independent advisor to run portfolios at a lower cost and kind of give them that scale that they wouldn't be able to do as a solo practitioner or small ensemble.
Yeah, cool. No, that makes sense. What's your overall like investment philosophy of how you view the market?
How I personally view the market, I think what I would tell you just from a modelist standpoint, everything that my company does is rules based and evidence based, meaning that everything is heavily researched, long term histories. So I think evidence based investing is first and foremost my number one personal belief. Obviously, my partners as well. Um, Asset allocation also drives a vast majority of the returns, and so what are the things you can control? It's asset allocation and expenses. I think those are in risk budget, if you will. And I think those, if you're controlling for those things and disciplined, you're going to win over time. That was a big reason why I decided to leave, the manager space to go to more custom models. Because I think what you realize when you're selling a fund is that fund is a piece in a much broader pie, right? And I always saw these funds as great products, but they weren't necessarily solving the problem that the advisor had. They were solving a piece of a broader pie.
Sure.
And advisors are getting asked to do more and more on a daily basis, planning, life planning, all these other things. And you've got your CFP, you've got your CPWA, maybe your CPA. You know what you don't have? Your CFA. You don't have a PhD in currency, things that really drive how markets work. And so I just saw that these independent advisors needed support of an OCIO. But the challenge, I think, in the traditional OCIO model is that it's not always fully customized. Sometimes the advisor has to pay out of their own pocket for the service, and that's not a wrong strategy, but there's other ways to deliver these customization models and bill a client while providing a litany of different, more sophisticated tax services on top of it, and do it in such a scaled way that puts the advisor and their brand at the forefront. I mean, that's what got me excited is that, solopreneurs and founders, they're selling themselves to convince advisors to come partner and stay with them.
Right.
And why would you want to go farm out to a BlackRock, a State Street, or a Vanguard, a model portfolio that is full of all of their stuff?
Right.
It's kind of our view that you're almost becoming a wholesaler for an asset manager by not looking at all the best of breed that's out there, and then bringing that together in a way that fits not Modelist story, but your story.
Right.
You're talking to your clients. How do we kind of empower your brand and give you that much more ownership? Because if we're doing this right and a good partner, what we do for you is aligning with your brand so you can spend more time with clients, more time talking about what you do. And what you're hiring us for is our intellectual property, not only to build it, but then keep it running, provide content that supports it, and do all of those things that an OCIO would do. But I think what's fun about our this platform is because it was built with technology at the forefront, we don't need a litany of very highly paid CFAs to do all the work because it's all systematically done in a system that we built. And I think that's what got me excited. I saw the scale potential, and while giving people what they want, which is customization, personalization. And I think that was this linchpin that, I see a world where 5 years from now, custom portfolios at the client level is going to happen.
Yeah.
And I think it's already a little bit there, but I can see that our technology, once it's in the cloud, you can build a portfolio using our tool and then send it to a trading platform right from your desktop and run it however you designed right there in front of a client point of sale, which I think is interesting.
Yeah. So you mentioned three things: evidence based investing, asset allocation, and then personal branding, or even like a firm branding with how they manage money. So just using a specific example, like recently gold and silver have been skyrocketing, silver especially. Bitcoin has actually been dropping, which is showing the world that Bitcoin doesn't work the same way gold does.
Exactly. Yeah.
um, and the stock market has been going up. I think it's been a bit choppy the past few days, but like, what how do you take an evidence-based approach to explain what's happening with gold, silver, Bitcoin, and then the market itself, like these different asset
Yeah.
classes?
So the way that our platform is built, think of we've got about 50 different, a little bit more than 50 different rules based ways of thinking about asset allocation. And those are all elements that you can bring in to build a total portfolio. Some of those strategies are as simple as what is the shape of the yield curve and are credit spreads compressing or contracting? And that just tells us how much high yield versus treasuries to own. It's a very simplistic way of thinking about asset allocation, but we went and tested and proved that our technique adds value over the benchmark over time. So
Okay.
and then we actually give that to the advisor with 100% transparency. So they'll see all of our research for that strategy, all of the rationale behind it, how it actually works to the day, to the dollar, and then hopefully 20 to 30 years of performance, right? So the evidence based approach is really saying, we know that our research generally works, but it could very well be tomorrow Trump invades Greenland and these are evidence-based techniques on what happens. Does it
Okay.
predict the future? Not always, but statistically speaking, it is far more right than wrong, if that makes
Okay.
sense. So
Yeah.
that's
No, that's
that
cool.
evidence-based approach.
So are some of those rules based things like values based, or vector
Well,
based, or momentum, or
yeah, so we have things like value. Think of like relative value, relative strength, risk parity. These are all things that mutual fund managers offer in mutual funds.
right?
Most of them offer these things that are very unique for 100 basis points or more, and that's a piece of a client portfolio. So instead of charging an advisor 100 basis points for the fund, we're going to charge you 10 basis points or less based on size, give you access to the entirety of the strategies, and each strategy doesn't have a fund in it, it has an asset class. And we can take any fund, ETF, index, and fit it into that asset class framework to build your diversified model. So, what it allows us to do is build that rules based, evidence based model portfolio that the advisor knows exactly how it works because we want them to have ownership in the design and the structure because they have to talk about it with their
Right.
clients and
For
they have to
sure.
know how it works.
Okay, that makes sense. So then the branding part, like the RA that I work for currently fractionally, has a very strong point of view on how money should be managed, especially on a bull market that's gone on for a very long time. And everyone knows at some point there's going to be a correction. No one knows when. It could be 20 years from now. It could start tomorrow or today. uh, how do you align like the advisor's personal point of view with the product that you guys are selling? Like, is it part of branding the firm based on their
Yeah, so
own
I think a big
strategy?
part of it is like we look at our clients. What do you like? What do you like about what you're doing? What do you not like about what you're doing? What do you want to improve on? And what we won't do is throw the baby out with the bathwater and say like get rid of all the funds that you have. If we find out through our consultations like this is where you want to go over the long term, we'll kind of stagger things to get you where you want to go while running the infrastructure for you, if that makes sense. So
Yeah.
we are, and then from a content standpoint, because of using this rules based framework and having it in these elements and these strategies, when we marry them all together, everything is not, we don't use AI to make any investment decisions at all. What we do though is once we meld your version, the Joe Moss model together, once we find out more about you, right? Because it's all data that's being fed into how things move back and forth, we can now intelligently prompt AI to just take the data and the numbers and how everything was built and just help us write some investment rationale. Why does that make sense? Really, because the firms that aren't doing things like that are paying people $100,000 plus a year to do it, and that makes your end price a little bit more expensive. So we're trying to kind of use the things that we know that can create some efficiency based on our experience while still giving you that custom feel. And so that's why once we build you your model, we support it consistently with different white labeled emails, content, monthly calls on what's going on in the market that you can repurpose and brand to yourself. But
Yeah.
also everything tailors back to this generalized model that we built for you that is specific to you. And I think that's what's kind of cool is that the technology pieces allows us to take this and do it over and over again and have different instances at each RA. So I think right now we're about a little over 2 years old, 2.5 years old. We've got about 2 billion following our models, 190 different models with different holdings, different strategy weights, all running from this platform that my partners basically built, and that's coming into a cloud-based tech tool.
So you're basically a TAMP, and then you've got 2 billion under management, or two billion on the platform. Um,
Mhm.
do you charge basis points, or is your
We do both.
rate of okay?
Yeah, so a big ethos of Modelist is meeting advisors where they are and where they want to be met. And part of
Okay.
that is there are some advisors that want to do a flat fee arrangement, and so we will
Sure.
do that. We can also do a asset based arrangement. The asset based arrangement gets a little bit more interesting, and I only say that because part of my background in my career was calling on all these different sophisticated trading tools. So we can actually take the models that we build for you and the asset allocation. I could plug it into a multitude of different trading tools, give you more sophisticated tax overlay, direct indexing, all that stuff. But when we do that, we then bill the platform trading fee and our fee all together. It bills from the client account, remits our portion back to us. And so all in for a platform like that, it's about 15 basis points or less with full tax management, which we think is very competitive to the TAM space.
Yeah, for sure. No, I studied TAMPs at one point. A lot of them are in the 30s to 40s basis points.
And I think that's what's kind of exciting to me. And I think one thing that I would love the listeners to know, and I would be curious your thoughts. There's a difference in my experience between a TAMP and what I would call an implementation agent. TAMPs, in my view, they do all the trading, rebalancing, all that fun stuff, but then they'll have a CRM with it, a proposal tool, of this, of that. An implementation agent is far more like trading, rebalancing. That's all we do. And if you want to go pick your CRM somewhere else, go ahead and do that. The reason you would make that decision is that with the implementation agent side, you're getting all the investment stuff you want and not paying for stuff that you probably don't need for that higher fee. So that's kind of how I always like to differentiate. I'd be curious what your opinion would be of that if you got
So you're
interested.
more the implementation agent. You're
Well, we
that
can plug in tanks. We have relationships with Advison, Black Diamond, you name it.
okay?
But there's also firms that are trading and implementation agents that don't really do all the other things that Advison does with CRM, et cetera. They're only going to do the investment implementation piece,
Right.
but the cost to do that is just a lot less. And so some advisors want to build, as you know, their own tech stack and use a different CRM. Those I think generally are better clients for us because we're really good at building that investment infrastructure very thoughtfully, systematically, blah, blah, blah. But then you can now choose different, like, some of the others. I think Slate was one of the ones that you're a fan of. But I
Slant,
think
yeah.
that to us is a better piece, because, as you know, advisors like to pick their tech stacks. We know the implementation space very, very well. And so we're not married to any one of them. It's more about, what do you want to have happen, why, and what do you want to pay for it? And we'll kind of introduce you to one of our partners and let you pick the one that works best for you. We want to be agnostic, because we're good at building the infrastructure, the models, the asset allocation. We don't want to marry ourselves to one trading partner. We think that we want the advisors to be able to choose what fits best for their business and their.
Yeah. No, that's great. It makes sense. Do you want to jump into a demo? Are you prepared to do that, or?
I am not prepared to jump into the demo, because we are in beta one, and it's locked down to everyone except my partner right now.
Okay.
I will tell you that should be done by the end of February. And I think, again, the future state is basically everything that we're already doing on a bespoke basis is going to sit on a cloud-based tool. You'll be able to take any of those 50 strategies. We'll build you a custom model. We'll upload it onto the software, and you'll be able to, drag and drop different strategies and funds, and or build a new model from scratch right on your computer. And I think for us, we think that we still want to be involved in the process. We want to be consultative to all of our clients, but being able to have the software on your desktop, it allows the advisor to play around enough where they can reach out to us with questions, versus constantly try to redemo versus then just playing around. We feel like it's a fairly intuitive tool.
Yeah.
And so that's kind of the route that we've taken.
No, that's cool. So, of all the firms that you're working with, are there any common characteristics? You said they're firms that like to pick their own stack. Are there any sizes that
Yeah,
seem to
yeah. So
resonate better?
I would say, our sweet spot is that, $80 million to probably $1 billion ensemble. It's
Okay.
generally going to be a group of advisors, less than 5 or 6, and probably planning focused. I think one side would be the RA, like more simplistic mom and pop next door RA, where we just build the models. They pay us a flat fee, and we just send them the stuff, and they do whatever they want with it. That's like our general client. But since I've come on the last year, we've brought on 4 different, call it 250 to $400 million multifamily offices.
Okay.
And so I would say that, and the reason that they're different, one is like a flat fee OCIO, the other one is that SMA delivery kind of mechanism. I think we are seeing more interest in that side, because the trading technology and the ability to, like, household tax optimize our models to a specific household. I think we see that being a big kind of future state for not only custom models, but custom portfolios at a client level.
Okay. Um, let's say, for example, a firm is using Altruist as their custodian. Like, how practically do you create a model in Modelist and then push the trading instructions to Altruist or to a Schwab or to an Advison to actually execute the trades?
Yeah, so I'll give an example with, I don't know how well you know SmartLeaf, but they're one of our partners that we like quite a bit. They give us a manager portal. So more often than not, in like a Tampa trading platform, we sit inside of a model marketplace.
Okay.
But a big reason, even though our strategies live in the model marketplace where we upload signals and weights, what we do is we ask that the strategy is gated away from the broader model marketplace. And the reason we do that is we don't want, if we build Joe Moss a model, we don't want XYZRA being able to copy what we built for you. So
Right.
we kind of will do all the heavy lifting to upload into the Tampa trading platform. What the advisor has to do in that instance would be in a sub-advisory agreement with the trading partner or TAMP. We upload the models. All they do is drag and drop the models into the client account and decide tax budgets, what have you. And it's fairly as simple as that, at least from an uploading implementation. The only other thing, and it depends on the trading partner, for tax sophistication, there's a UMA and there's a UMH. And with UMH, you get a little bit more tax tools that are systematic in the tool itself. So with those platforms, it's not just drag and drop the model. You're going to have a conversation with the client on capital gains, budgets for a year, cash minimums, and some of those things. So yes, it's drag and drop, but you can get a little bit more granular at the end client level on how it's trading and rebalancing to that specific client.
Cool. Yeah, I'm interested what on your thoughts on where investment management is going. I recently wrote a post called Zero Basis Points, which was basically like AI is bringing the value of most things that an advisor does, like not zero, but close to zero. Um, what are your thoughts on investment, like managing the actual investments, the value of putting together a custom portfolio, and then maybe eventually even at the individual client level? Seeing
Yeah,
as that's kind of what you all do.
yeah. So I would tell you, at least from a custom model perspective, most of the big managers, if you were to look at Cerulli, I think they say there's $350 billion in custom models that big asset managers are building for RAs, broker dealers, what have you.
Yeah.
And I think that's where they've traditionally done that. All these models look the same, and it's delivered in the same way to everybody. Technology is now getting to a place, especially with direct indexing and some of those other things, where hyper customization and personalization, not only to the RAA, I mean, we're already there right now. But I think to your other point, it's the future state of this business, in my personal opinion, is building custom portfolios for the end client. They have the buy-in of how and why you build what you build, and they have say in tax overlay. So again, my future belief in 5 years is, if I'm an RAA, I sit across from Joe, I talk about your financial plan and all those things, and then we can sit and build a portfolio based on our tool visually, so that you know kind of what you're getting, and then we can have a different discussion on what you want to fill it with, active versus passive, direct indexes versus not. That is the consultative discussion. It's far more planning focused. The money management is important, but I do think that there are systems that are already built and that are being built that are taking that value of the big manager to the RAA. It's getting smaller. Does that make sense?
Yeah, no, for sure. What so is this like values-based investing, or what are the factors that would go into a custom portfolio for a particular household?
So we have 50 different ones. So again, it's things that have been sitting in mutual funds or separately managed accounts by, like, different ETF strategists. Those are all things that have been sold to the advisor public in a like single sleeve strategy. And I think for us, we're saying, well, why do that and pay a higher fee on that sleeve that's in that strategy when we can just give it away to you for a fairly low cost, and then build you how it interacts with everything else. So we're kind of taking what when ETFs came out, what did they do to mutual funds? They made them easy to use, cost effective, and transparent. Like, that's what we're doing for portfolio construction and asset allocation. And I think that's where, like, everything you hear about in the manager community is custom this, models that. And that's not a wrong place, we think, to be, but it's that, can you do it in a way that is really going to highlight that advisor brand? Are you going to bring them things that are going to help them be better at closing that $5 million client? Some of these firms that we brought in the last year were kind of starting to move up market, and they knew they didn't have the investment powerhouse kind of persona to bring high quality investment advice to a $5 million client. And so those are the clients that we love, because they trust us and our experience and our credibility to build them something that they know will go up against a private bank, another RA, so on and so forth, and have that more sophistication and kind of high end institutional backing that I think they want, but they don't want to pay for.
Okay. No, that makes sense. I really like that. It'd be fun to see it. I'm sure I'll
I will
figure out.
definitely be pinging you when it's ready. Trust me.
Sweet. Awesome. Um and another question is integrations. Do you guys how do you build out integrations? Do you have integrations with different companies or
So we are right now. We just integrated with Y charts,
okay.
and part of the purpose for that was we can do all the asset allocation and all the fun stuff we're doing behind the scenes. But from a point of sale perspective, if you're a RIA and you have another client portfolio that's a prospect, comparing what we built for you to what they're already doing, it was a little bit harder. But
Sure.
that functionality sat in Y charts, so we built an integration there so that if we build someone a model and or portfolios, it will upload all the back testing and all that stuff into Y charts so they can do one-on-one comparisons.
Sweet.
And I think secondarily, one that I think you'll see from us, it's not 100%, but there's a tool that's called Hamachi, if you've heard of it. Basically, some compliance, and something that we might be able to build as an integration on the platform to help that much more quickly take the data that we're feeding and providing compliant information for the RA to use as they scale. So that's one
Is that the one that like Eric Clark and Brian McLaughlin are building?
yeah.
Yeah.
Eric, so
What
my
so what exactly does it do?
so it's a large language model that allows you to upload different. So we could take our a portfolio that we built for you. We could upload it into your own version of Hamachi for your firm. And the way I understand it is it's going to be able to take that plus any signals that we deliver into the platform and write any. So a client asks you a question, why am I overweight growth or whatever? We've already delivered that information through everything we've done, but coming back to us to get that client question answered versus just going into Hamachi and typing a quick query based on what we've delivered into it, it will give you that compliant answer back faster. So it's
Okay.
just more of a hedge on operational kind of stuff. And I think the only other integrations I would say it's trading partners. We
Okay.
want all trading partners because trading, each advisor views trading a little bit differently. And I think the tools that have been built, like firms like Brooklyn or Vise, or these tools that I think are really high powered, that makes what we do that much better because we're going to give you an engine and the infrastructure to be pretty bad, a bad man in the financial money management space. But the supercharging is the tax management. And I think that to me is something that some of the industry has already kind of hit on, but there's so much more to go that I think to me that integration of trading and tax aware type tools, those are integrations that we'll continually work on.
Yeah, no, that makes sense. I need to dig into Hamachi. I looked at it and I saw it was an LLM and I was like, I got zero interest in
Yeah,
LLMs.
I know, and believe me, I think one thing that you and I love your take on AI and originality.
Yeah.
I would say one thing that I would be curious of your opinion. I might have heard this before, but I we use AI. We don't use it. We don't use it as a idea generator. We don't use it as, I use it to maybe help write an email. Where if I'm sending 25 emails in an hour, I want to be able to talk to it and tell it what I need to follow up from, and it helps give me the framework, and then I come back in and make sure it reads right, right?
Right.
Or I've uploaded a bunch of books that I like. So like I'm a big Seth Godin, Simon Sinek guy. When I want to come up with how to position a concept, because I have the books all in the LLM that I've already read, hey, I'm trying to think of how to position this concept that I'm working through. And it works like this. Based on what I've fed into the LLM, like how would I frame that? And so it's just I use it, but I don't I like you do not see it being an end all be all. I think it's a tool. And so it's an interesting take, but I do think that those folks that are thinking that it's going to change everything, and the lack of originality, people buy from people they like. And I just don't see AIs making best friends with people that manage money. I just don't.
Yeah, no, I think AI will be in everything. AI will be in our homes, in our cars, in every technology we use. I think everything in the background will be a bit supercharged by AI, but for creative content or for trust building or for relationship building with other humans, that's where I think you need to avoid it like the plague.
Great.
Um, because um because sorry, I got distracted.
You're
Um Yeah, because people don't like so I literally did a poll on LinkedIn. I was like, there's someone you really respect, you respect their content, and then all of a sudden you see that they're mixing AI into their writing, so you don't know what's them and what's the AI. Do, do you start to trust them less? And like 35% of people say yes, I don't trust them as much.
I would agree, and you can see it on me. I'm very vicariously on LinkedIn, and you can see the people that forget to take the dashes out or the emojis. It's like that
Yeah.
is the most telltale sign. So I'm in agreement that that does erode credibility if you're not paying attention to
Yeah, and also like I think the human brain is the best piece of a tech advisor technology you'll ever get access to. So
that. Yeah,
like
right.
take money literally and like invest it in your brain. So I think there are times when you can use AI to help you write better, to clean up spelling errors or to phrase things better, but I think even better would be actually get better at writing, like actually get better at, copywriting, communicating and that kind of stuff. Um, you can use AI to like bump you up to 50%, but like if you actually want to be like top 10% of writers, you're going to have to do it
Yeah.
yourself.
It will help you be more productive. It is not going to take over. I don't think anyone's going to win thinking that it's going to do more than 50% of anything.
Right. Yeah, because it literally is the average. It's like the average of human intelligence. Yeah, so to be creative. Um, what are not maybe not naming specific companies, but like who are the competitors in your space, or who are you winning business away from that you feel like you are solving the problem of custom portfolios better than?
I would say that there are a few different asset managers in TAMPs that have kind of taken the approach of partnering with big asset managers and effectively getting models and technology subsidized to build you something custom. And it's like more of like, to me, it's custom with a catch. Um, Saying, hey, I'll pay for your CRM, your rebalancing, your this, your that, as long as you use this pool of funds, it's all paid for. The client doesn't see it, but the overall like total internal expenses are demonstrably higher than if you just did it right. Where we've been taking the most business, it's the big asset managers that require you to put 30 to 50% of their funds in the custom models they build. That's an easy one for us. And then it's breakaways. I think the breakaway advisor needs what we do, because if you're leaving a wirehouse or a bigger firm, you need some sort of infrastructure. And I think those are the other areas that we win business. And it's more about a necessity that they're already making a change to their business and they need someone. But those are the two areas. It's either they know that they're not disclosing that they're getting free stuff in their ADV, and that's an issue for compliance. So they tend to be more interested in our platform, assuming the economics line up, which I would argue generally they do. We can get our fund expenses down to like 7 basis points. So like all in, we could probably do for 20 basis points or less what the big asset manager will do. And what we're not going to require you to do is use any funds because we don't have any. We
Right.
just have the strategy.
No, I got a hard look into that in my first job in the industry. That about a quarter of the book of business had over 4% in fees. So they had the advisor fee, the broker dealer fee, the third party manager fee, and then the fourth thing was the underlying funds of the third party manager fee. So it's
Mhm.
4% in fees. Needless to say that the performance was atrocious.
Not so good. Yeah. 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 And I think that's a big ethos of like, I think my three partners and I are cynics by design. Wall Street loves to sell complexity for high fees. We're trying to sell transparency for low fees, knowing that we're not going to win everybody, but we're going to win probably the right way. Hopefully, better outcomes, not only for the end client, but we know based on trajectory of what we've done that there is a business model here that the RA community is telling us that they want.
Yeah, and that is a way I actually think actually AI is helping. My my vision for what I do is to find the best companies in advisor tech, and the best companies in advisor tech typically are doing it better, cheaper, faster than their competitors, and more innovatively. And so like it's very easy to sell a software that does it better, cheaper, faster, and is innovating, more quickly. That can literally ship new features like next week than all these legacy players that are taking years to ship features that aren't even relevant anymore.
Well, I think one thing that's interesting, and I'm curious your take, but a lot of the other players that we would consider competitors, like some of these big legacy TAMPs, they've built their architecture on old technology.
Right.
And I think that is, again, I'm not a technologist per se, but I feel like that leaves you hamstrung to really to update a current platform or start from scratch and create something new. And I feel like these older platforms didn't have AI integrated because it wasn't there. And I think they're going to struggle to kind of get to where they want to go. They're big organizations. They've already got so much invested in that. I just wonder, do they just look at acquiring somebody else versus trying to build it themselves? My sense is acquiring because that's what everyone does now. But um,
I think it's incredibly difficult to rip out the code that literally runs everything you do and rebuild it.
right, I would assume so.
There are companies doing it though. I mean, I talked to FP Pathfinder, which has been around for several years. Michael Kitts is one of the founders, and Mike LaCour is the other. But he said they just this past year like completely rewrote their entire code base, with modern, modern ways of doing code. And I think any company that's trying to keep up is going to have to do that. And I think, the companies running on old code or old ways of, they're just going to be laggy and break a lot, and it'll be very difficult to apply the new, you know things that AI adds to the mix.
I
um
agree.
so I think companies built in 2025 and 2026 with AI like built into everything, and the APIs built to be like super connective and stuff. I think they're gonna fly past the other companies.
Well, you're
But we'll
making me
see.
feel like I made a good choice coming here because all of those things that we're trying to do, we're trying to be, we want to be on the forefront of where we think things are going.
Right.
And again, like I said earlier, it's like we have some high powered guys on our team that have done and or seen cool stuff, and we feel like in the investment advisory business, what are you buying? If you really boil it down, if it's planning, that's intellectual property. Investment advice, intellectual property. I think that's what I view. What we're trying to do is we have intellectual property both on how to build this stuff, what's going on in the industry, what's next. Does that fit into a broader, how things have always worked kind of a thing? And that's part of what we think is the value, is not just the putting it all together, but it's our understanding of what's going on in the broader investment landscape. Does it make sense to bring it in? If it does, here's how we would do it, right? And that's kind of where we sit at this, almost like we compete in the TAMP, we compete in an OCIO. We're almost like a fractional CIO of sorts, that kind of sits in between those two, where we
Yeah.
could be an OCIO, we could be a TAMP. It's more of like, what is that RA trying to accomplish, and how do we wrap what we're known for in our intellectual property around them to get them where they want to
Yeah. No, that's cool. Do you have any big goals as a company that you're willing to share publicly, like your Modelist 2 or 3 year BHAG or whatever?
go. Yeah, I mean, I think, well, goal number one is getting the software ready to go.
Right.
I think getting on the tech map was huge. Just being a young company and seeing the caliber of the teams that are next to us, I think that was kind of a fun goal that I don't know that we had on our list, but it definitely felt good. I think the biggest goal that I personally have for our business is to put all of the managers, platforms that are overcharging clients for not giving a lot. I want to put them on notice that advisors deserve better, so do their clients. And the smart ones that know what they're doing can build that for you. And
Yeah.
and to me, I look at my LinkedIn and I see who's looking at my profile constantly.
Sure.
More and more, it's people from BlackRock, people from Goldman Sachs, people from all these, and they're not. These are all great firms,
Sure.
but I'm getting their attention and they're understanding that we believe that there's a better way to do this, and if we're doing it right, the industry at large is noticing. So it's partly that seeing these competitors look at us, but I think it's also like, are we being asked to give our opinion on something? Are we,
Sure.
we want to make an impact. Obviously, we want a financial reward too, but I think the way I would explain it is like the three partners and I, or two partners and I, we're very big on winning the right way.
Yeah.
And winning the right way for us really means making an impact, like a profitable enough impact to the community, so advisors know that they don't have to lean on a highfalutin New York based money manager or someone else for advice. The information's out there, and if we can give it to you for a strong price point, better economics, we're actually providing value to someone.
Yeah.
So the only other goal I would say, like we were runner up for portfolio construction at the Wealthies last year.
Okay.
We lost to BlackRock. Maybe that's a short term. I
They
would love
paid
to
more
get.
money, man.
I
Everybody
know.
knows it.
You said
Everybody knows
one,
it.
but that's
You get
it's those things. It's recognition that we're making an impact in the advisor community. I would say too, like, because of my background calling on some more sophisticated RAs, I've been able to bring what we're doing to them. Not necessarily that they are the perfect client for us, but I've built trust and relationships with these folks, and being able to show them what we're building has been a great reinforcer to, like, we're doing the right things. Like, these people are running billions and billions of dollars, and they know how the game works. And when we
Yeah.
show them what we're doing, not one of them has said this doesn't make a lot of sense. And that just means that I feel like I'm in the right place, and we're going to do the right thing over
Yeah.
time.
No, it's very fascinating when you put out, well, so one thing is like a double bottom line, which is do well while doing good. I think that having an impact in the right way will make you money. Like
Yeah.
I think in a way the universe rewards people that do good. It rewards them financially, not always, but I think if you're have the right heart and you're helping people, helping advisors, and they're helping their clients, like it all works out. Um, Someone told me, it's like, Joe, you're attracting all the companies that are wanting to come on your podcast or be in your network. You're literally starting like a Joe index for the companies of the future, which is
I'm happy to be here.
the companies that have no interest in what you're doing are not a good fit anyway, and they're probably not doing things the right way. And I find that concept fascinating. Almost like the people attracted to the work I'm doing are the kinds of people that I resonate with, which
Yeah,
is
and
cool.
I love that you say that, like the community concept. I think that's also what we are trying to create is like I would say almost I would think all of our clients that I've ever met, I've met most of them, they all just strike me as they care about their clients. They want to put them first. So it is like there is a certain kind of archetype mentally of the people that work with us, which is
Yeah,
also liking who you work with and knowing that they're trying to do the right thing is
yeah.
feels just as well.
Yeah, it's a bit like law of attraction. You know, you'll attract the people based on the vibes you're putting out. I think the other thing is a Charlie Munger quote, which is the safest way to get what you deserve is to deserve it.
I use a line that there was a movie called Pain and Gain with Mark Wahlberg and The Rock, which was based on a true story, which is why I thought the movie at the end was awesome. But there was a
Okay,
line in there that believe and deserve it, and the universe will serve it.
that's cool.
That's my
Yeah,
line.
similar. Believe and deserve it, and the universe will serve it. There you go.
Yeah.
That's cool. Well, any other thoughts, or we can wrap this up?
I mean, I would just say to any of your followers, anyone that's interested in seeing how we can either empower what they're currently doing and or just wanting to learn a little bit more about what's going on in the broader asset management space, I would say follow me on LinkedIn. I try to be on there as much as possible, and I'm building our brand via organic growth, and that is done by showing people what we know and what we do and how we think we can help. So anyone's welcome to reach out or provide feedback. If someone listens to this and has an idea or says, don't say that, don't do that, we just want to be the best version of ourselves.
No, that's awesome. I love that. I think there's been a lot of misconceptions about organic growth, especially around AI. And every single expert in the industry I talked to, including Josh Brown, Jason Wank, Michael Kitces, organic growth is built through trust, and trust is built through value and honesty, and
And
not
time.
not fake intelligence. Organic
That
growth
is true.
is not based on fake intelligence.
That is true.
All right, awesome. Well, Alex, thanks for coming on, and
My
I'm
pleasure.
sure we'll see you around.
Thanks, Joe. Have a good day.
All right, talk to you later. Bye bye.